Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. We're getting into the second week of Q3 earnings. Last week was the banks. Now we start to get into some of the companies that can give us a little bit of feedback on how this economy is really going, how is consumer spending really going. So we're going to dig deep into week 43 earnings to try to gauge where the stocks in our portfolios are headed right now. Reminder as always that my stock picks and projections are just my opinion for your entertainment. Please make sure you're doing your research and your due diligence before purchasing any stock. And of course, if you do like to analyze stocks like I do, then make sure you subscribe to the 40 Finance channel. Do 3 or 4 videos on this channel every single week. And if you're interested in joining my email list, get my free 15-minute stock analysis guide when you sign up. Information for that is in the description. All right, so even if you're a long-term investor like myself, each quarterly earnings report gives a lot of insights to how your company is doing, and you can also parlay a lot of that information into the broader economy. And this really helps you start to understand which direction the company and the economy are going in. So while one bad quarterly earnings is not the end of the world, you can use that information maybe to buy a stock when it's down low, or potentially identify other stocks that could go up because of the news you learned in an earnings report. Now, in my opinion, this Q3 earnings report is very important because I personally feel like the stock market is on shaky ground right now in terms of really high valuations. And what that means is if some companies come through and have bad earnings or lower than expected earnings, then all this valuation that's holding these stock prices up will start to trickle down a little bit. So it's a double-edged sword if you are looking to buy right now, because you could argue that you get in today and that earnings crush it for your company and the stock goes up even higher. But my personal opinion on where valuations are today, I'm more or less looking for things that are very expensive from a PE and EPS standpoint. And I'm almost hoping that there's at least a little bit of mediocrity at the bare minimum so that I can come in on some of the stocks that I like and potentially get a quick price drop sale on them. And the other thing that's in most quarterly earnings reports, at least on some level, is some sort of guidance on what's coming up in the future for a company, for a market, etc. So paying attention to those comments is important. This has been a really weird year because with COVID, a lot of companies have pulled their guidance. They don't even like to talk about it too much because it's such a wacky year. But if you dig through some of the quotes and headlines, you'll be able to find that some CEOs will be brave enough to give their 2 cents on where the world is headed. All right, before we jump in, here's just a quick example of how earnings statements can really change the game. And I've mentioned this in another video. This is Fastly, which is a high growth stock right now. A lot of momentum behind it. But you'll see at the end of this chart, they came out last week and they basically did the right thing by their investors. They came out and said, we have a little bit of concern with our TikTok client hasn't used our services as much as we thought they would. We didn't end up billing TikTok on the volume of service that we thought they would use, so we're pulling back a little bit on our expected earnings come their earnings release, which I don't think is till like October 28th or something like that. But you see what happened, right? Top right of the screen, a pretty decent drop from $125 to $82. And that's just Fastly coming out and saying, hey, FYI, this isn't going to be a blowout quarter. And you see what happens. The price goes down and a lot of the fanboys jump out. Now, if you're long term, this is an excellent buying opportunity. If you go through your research, I don't know a ton about Fastly, but we can see I drew a black line there. You went from 125, which was easily overvalued or running at all-time highs at the bare minimum. Now you're down at 82. Well, there's a great opportunity to get into Fastly at the same price somebody paid, way back on, looks like about June 14th. So that's the kind of events that can come out of earnings. And if you really love a stock, you can get some great sales or price discounts that can really set you up for success across a longer term. Okay, so here's what we got this week, the week of October 19th. Now there's a lot of names here. This is from the Earnings Whispers website. They also do this picture, I believe, every week at least on their Twitter. Because that's where I got this from. So it's a great Twitter follow. I definitely recommend doing it. If anything else, to get this chart, you don't have to go flipping through a bunch of the smaller names to figure out who's reporting. So today is Monday, and on Monday, for me personally, there's not a whole lot that I'm interested in. IBM's a big company, but it's not one that I'm, invested in. Halliburton is oil, so that could be interesting if you're into oil stocks to hear what they have to say. I'm looking ahead more to Tuesday, and you see that Netflix is circled. You also have Snapchat in there. P&G is another one where you could think about how is the consumer spending going, but Netflix is definitely top dog. Then Wednesday, I think we have some interesting ones with Verizon, which is obviously cell phones. They also have a media network. How is that world going? Can we get a read on pre-orders for like Apple iPhones, for example, to use in our Apple earnings? Then you got Tesla, which I'm not a Tesla stockholder. It is in some ETFs in my IRA, though. And it's always interesting to hear what Tesla's up to, right? Chipotle, they are one of the big winners from Q1 and Q2 as people did more pickup and sort of Grubhub type deliveries. Is that continuing? Are they continuing to rake it in during this time, or did we see a shift in consumer behavior over the summer? And Align, that one's more or less for me personally. I'm an investor in Smile Direct Club, and Align is essentially a competitor, a little different structure to their product. But I will personally be watching Align to kind of get a feel for how their sales are going, because that'll give me a read on Smile Direct Club, which doesn't come out until early or mid-November. Looking at Thursday, Coca-Cola is the headliner. I circled Intel because if you're into any sort of chip stocks, like I'm in Taiwan Semiconductor, you definitely want to hear what Intel has to say. Also, Intel's gotten pounded this year. What's their update, right? What are they saying about what has turned out to be sort of a rough year for them? And then lastly, on Friday, American Express. I don't invest in American Express, but I'm in Visa and PayPal quite heavily. I will be interested in any intuitions I can get out of the American Express report. All right, so next up, I'm going to take about 4 of these stocks and just kind of show you how their trend has been going this year and try to give you a feel for what's upcoming. All right, first on the board is Netflix. We'll go through this really fast. The yellow box helps us compare what they did last year in 2019 versus what's expected this year. So you can see at the top, I circled 147. That was their actual EPS last year on 9/29 of 2019. That 147 was a surprise to analysts. They came in over at 41%. This year, folks are hoping that they get to $2.13. As you see, that's the final circle. So there's definitely expectation here for Netflix to do a lot better. Makes sense with the kind of industry they're in. But if we look up at the orange box from March and June, you can see I highlighted that Netflix has actually come in under estimates for the past 2 quarters during this pandemic time. So it's not a given that Netflix is going to hit their EPS target. In fact, the last 2 quarters they haven't. What's going to be interesting if you're a Netflix fan is how is subscriber growth going, particularly international, and then Netflix is mature enough that you can start to look at their revenue per user to see if that's gone up. They'll also be talking about any price changes, and they'll be sharing any announcements about new shows, ideas, etc. So Netflix should be an interesting one for almost everybody, even if you don't hold the stock. All right, next on the board is Tesla, and Tesla's just reached this point where any news that comes out of them, you feel like is going to change something in the market, right? So we all have to pay attention. You can see last year, I would assume that this is non-GAAP EPS of 37 cents. This year, the projection is 56 cents. And we look in the orange box, and this is the interesting part about Tesla. They have over-delivered on their sort of EPS projections, right? As a matter of fact, last June, 4,300%. So that's great. It makes you wonder, though, what happens if Tesla comes in at a flat, right? That they just hit their EPS, or they go just a couple pennies under. What happens to the stock in the short term? It's tough to say. But the other thing you get with Tesla is obviously a look ahead at the EV market in general, and start to feel for how is consumer demand going for them. I think that that's the one that often gets overlooked. I think that their production, factories, the way their operation runs, I think we're all in awe of how that goes. But at the end of the day, do people want to buy Tesla cars, right? And there's certainly plenty of people that do, but eventually it has to match up with the numbers that have been posted on the board. So just because, let's just say 50,000 people want to buy a Tesla, that sounds like a lot of people, but eventually we're going to get to a point where their earnings expectations are going to be for, 500,000 people buying a Tesla, and that's when I'll be interested to see if they can carry on with the current pace. All right, now we have American Express, and again, I'm interested in this one as a holder of PayPal and Visa, so that's just an example of how you can kind of correlate earnings that aren't necessarily your company. You can see in 2019 in the yellow box, their EPS was $2.08. This year in September, the estimate is $1.33. So significantly off last year's. I've talked before about the trouble that credit card companies have had with the lack of travel expenses. And with now knowing a ton about American Express, that could be in play here. Now, up at the top in the orange box, you can see American Express. It's very similar to Visa. In March, they had a terrible quarter, right? So minus 71% off the expected, but that's just when COVID was getting sort of ramped up and really affecting travel. Then they came back with some good news on 6/29. The estimate was negative 11 cents, and they actually posted a 29-cent gain. Now we've just been through summer, and best I can tell from the news and being out and about, it seems like maybe airlines aren't full, but I think generally speaking, the vacation spots have been hot from what I gather on the news. So can American Express show significant improvement in their overall volume? And if so, we've got Q4 coming up, holiday shopping season, very important for them. They should give us a read on what they're expecting for Q4. That's going to be interesting for anyone who is in any type of consumer sector stock. All right, so that was the week 43. Next week is week 44, and we'll get excited because this is when it really starts to come together from the big dogs. This is a snapshot of who's reporting next week. Apple, Microsoft, Amazon, Google, Facebook, Visa, Samsung, MasterCard. There's others. This was just the large cap names. So heading into Halloween, we're going to have a lot of feedback on where this economy and consumer market is really going. All right, guys, hope you enjoyed this look at week 43 earnings for Q3. Remember, there's a lot of subtle signs within earnings reports that you can use to your advantage, and it doesn't always move the needle for you, but if you can start to figure out just by reading reports, right? Like, which way is the economy headed for this sector? You know, how is this company doing? Because that's very similar to a company that I'm invested in. You kind of take those things and that helps you read the room, right? On like, should you buy another lot today or should you hold off, seeing what you read in earnings that maybe you'll get a discount in the not too distant future. All right, please give me a like and subscribe if you enjoy this type of content. Thanks to everyone for supporting the channel. We'll see you on the next video.